So real estate is a broad term that encompasses a wide range of property types, and each of them has its unique characteristics, challenges, and potential rewards. But understanding the different types of real estate is essential for anyone interested in investing in this type of asset class. Now in this video, I'm going to explore the 4 primary types of real estate. They are residential, commercial, industrial, and land. Now, my name is Rock Daniels, and I am the Bluegrass Realtor. I've been a 20-year realtor, real estate investor, and a general contractor. So if you'll do me a favor, take a second, hit that subscribe button so you can get more of my videos. Now, let's talk about the 4 primary types of real estate. First, it's residential real estate, because it's the most common type of real estate and includes single-family homes, apartments, townhouses, and condominiums. Now, residential real estate is often considered the easiest type of real estate to invest in because it's what we're most familiar with. All right, it's easy to understand the demand for housing, obviously. So residential real estate investors can generate income through rental properties or by flipping properties where they purchase distressed properties, renovate it, and sell it for a profit. All right, residential real estate has several advantages, including consistent demand, easy financing options, and a variety of investment strategies. However, it comes with challenges such as tenant turnover, maintenance costs, and potential zoning issues. Now, the second type of real estate is commercial real estate. Now, commercial real estate includes office buildings, retail spaces, warehouses, and other types of properties that are used for business purposes. Now, commercial real estate investors can earn income through leasing the property to businesses, which can provide a more stable income stream than residential real estate. However, commercial real estate typically requires a larger upfront investment and more significant ongoing maintenance costs than residential real estate. Now, commercial real estate also comes with a unique risk, such as a downturn in the economy, changes in consumer preferences, and changes in zoning regulations. However, well-placed commercial properties in areas of high demand can generate significant incomes and capital appreciation. Now, the third type is industrial real estate. Now, industrial real estate includes properties used for manufacturing, storage, distribution, and these are such as like factories, warehouses, and logistics centers. Now, industrial real estate investors can earn income through leasing the property to businesses for storage, manufacturing, or distribution purposes. Now, industrial real estate can be an attractive investment because it offers long-term leases and typically requires fewer ongoing maintenance costs and other types of real estate. All right, however, industrial real estate can be subject to economic downturns, changes in consumer demand, and changes in the supply chain dynamics. Now, investors must be careful and evaluate the location and the demand for the property before investing in industrial real estate. Now, the other type is land. Now, land is another type of real estate investment that includes undeveloped land, farmland, and raw land. Now, land investors can generate income through leasing the land to farmers or developers or by developing the land themselves. Now, land investments can offer a significant potential returns, but they also have their unique risks, such as zoning changes, environmental issues, and natural disasters. Now, investing in land requires a long-term outlook and significant research into the location and potential uses for the property. Now, investors must also consider the ongoing maintenance costs and potential revenue streams before investing in land. So in conclusion, understanding the different types of real estate is essential for anyone interested in investing in this type of asset class. Now, residential, commercial, industrial, and land are the 4 primary types of real estate, each with its unique advantages, challenges, and potential rewards. Now, investors must carefully evaluate the location, demand, and potential revenue streams of any real estate investment before committing their capital. Now, by doing so, they'll identify the best opportunities and maximize their chances for success. Now, remember, my name is Rock Daniels. I am the Bluegrass Realtor. So take a moment, hit that subscribe button. Thank you so much for stopping by. Hope you have a wonderful day, and I hope to see you.